The Nasdaq 100 gapped down overnight on Sunday, hitting a new low of 10,834 on Monday. I mentioned in my last video that if we saw price close below 11,180, we would see new yearly lows, which we did, with the previous yearly low at 11,037. The gap down from Sunday was filled on Monday with a sharp snapback rally, filling that gap as you can see here. The rally was further fueled by this headline, where the United Nations warned of a recession linked to imprudent monetary policy, stating that central banks should ease off the aggressive rate hike policy. Now on Tuesday we had another jump in the Nasdaq 100, with price pushing through the 11,480 resistance level in the process as treasury yields came off. You can see the relationship in this chart between the 10-year and the Nasdaq 100. How every time the 10-year makes a big move either to the upside or the downside, the Nasdaq 100 does the inverse. Tuesday's move came about after job openings in the US fell sharply, with bad news now considered good news, with traders hoping the Fed will ease off rate hikes if the economy deteriorates further. Wednesday saw price backtest the 11,480 level as support before a sharp reversal. Now allegedly this sharp reversal and spike in equities was driven by one large options trade on Wednesday, according to Wells Fargo. Price came within a whisker of the 11,688 resistance level before coming off. On Thursday it was the same story. Bond yields up, Nasdaq 100 down, as we had a bunch of Fed officials continuing to talk up rate hikes to bring inflation down, with Fed official Kashkari saying the Fed has more work to do on bringing inflation down, whilst Fed official Evans said the central bank has further to go on rates, headed towards 4.5 to 4.75% likely by springtime next year. Then came the jobs report on Friday, which came in better than expected at plus 263k for September. Now this only fuels the rate hike talk, which is likely to see the Fed raise rates by 50 to 75 basis points at the next meeting. The Nasdaq 100 confirmed the break below 11,480 and is now on track to finish the week below 11,180. If this remains the case, the head and shoulders target from the previous videos, and I've put a link in the description box below for anyone that wants to see those, of 10,638 remains in play. That is the target of the head and shoulders. In terms of immediate levels to watch out for, 11,180 into the close is important. If we close above, then there could be quite the respite for the bulls, with price likely to remain choppy between 11,180 and 11,480. However, close below and we likely set a new low into next week. Big week next week as we have earnings season kicking off, with big bank earnings reporting first. And on Thursday, we have the latest US inflation numbers, which no doubt will add to the volatility. Reduce size in times of severe volatility. Good luck with the trading, folks. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.